Welcome back to Alpha Recap. I'm glad you tuned in. Quick note before we dive in, if you have questions about anything we covered today, you can reach us at stockalpha.ai and ask directly. Today, we're unpacking a tech-led rally that pushed the S&P to fresh highs and extended the Nasdaq's win streak, plus some interesting action in crypto and cyclicals. James, great to have you with us.
Thanks for having me. Nice setup to talk through. A lot happened, but the story was pretty clear by the close.
So, what really stands out here is the headline numbers. Tell our listeners the big picture.
Right. By the end of the day, the S&P finished up about 0.8%, and the tech-heavy Nasdaq finished up about 1.4%. Small caps moved, but only modestly. The Russell roughly was up about 0.25%. Those figures set the tone. Strong large-cap tech leadership, some small-cap participation, but not a broad-based stampede.
10-day win streak for the Nasdaq? That sounds like momentum on steroids. What was powering that?
A couple of things aligned. One was renewed momentum in mega-cap growth names, especially software and semiconductor suppliers tied to AI compute demand. Two was a crypto move. Bitcoin spiked today, and that ripple helped risk appetite across the board. Systematic funds, options flows, trend followers, they all piled into the leaders, which amplified the gains.
And analysts were talking about ad spend optimism and M&A chatter for communications and media, right?
Exactly. Ad-related momentum showed up alongside the AI narrative. When advertising meets improved targeting and AI-driven measurement, that can lift communications names. Add a few MA chatter headlines, and you get concentrated leadership there.
So while tech-led, a few other pockets popped up too?
Yes, utilities surprised by showing strength, but it wasn't defensive demand. It was more targeted. Grid projects, solar-related stories, and regulated infrastructure names got bought. Materials and miners also picked up steam on commodity-related headlines, and some consumer discretionary names saw positive revenue commentary.
Right. And the other thing is, energy was kind of split today.
Correct. Energy was bifurcated. Crude-related names were supported by supply concerns, while some tech-driven energy services and equipment suppliers also attracted buyers. So it wasn't uniform, but pockets of strength existed.
Financials and real estate felt more mixed, though.
Financials were volatile. There were regulatory questions, deal noise, and several 8K filings that injected uncertainty, especially among regional and community banks. Real estate was dispersed too. Industrial and logistics names held up, but office and mortgage-sensitive REITs lagged.
Quick sidebar for listeners. James, explain what an 8K is and why it matters.
Sure, an 8K is a company's disclosure of a material event. It could be a deal, a management change, capital raising, anything that might move the stock. Traders react fast because these filings can change expectations about cash flow, governance, or legal risk.
Got it. A few companies had filings today, like Integris, Leidos, Moody's, and a handful of smaller names.
Yes, and those 8Ks created idiosyncratic swings in those names. When the market's leadership is concentrated, single company headlines can create outsized volatility relative to their sector.
You mentioned Bitcoin earlier. That spike seemed to matter. How big of a role did crypto play?
Bitcoin's move acted as a catalyst. It lifted miners, exchanges, and crypto-exposed equities, and it added a short-term boost to risk appetite. Some market participants see crypto as purely speculative. Others view it increasingly as an emergent macro hedge in certain stress scenarios. Today was an example of crypto fueling episodic rallies in equities.
Interesting. So, cross-asset moves can reinforce these tech-led rallies.
Absolutely. Markets are interconnected. A big move in one asset class often spills into others through positioning, derivatives, and sentiment.
Honestly, I was a bit surprised utilities showed up on the winners list.
Yeah, that tracks. But remember, these weren't classic defensive flows. The move in utilities was tied to renewables and grid project headlines, more tactical than flight to safety.
Let's talk technicals and internals. Breadth was positive but concentrated. Tell listeners what that means for risk.
Advances outpaced declines, but the meat of the gains came from a handful of high-conviction tech and media names. The Nasdaq's 10-day win streak drew trend-following flows and options activity. At the same time, small-cap participation was modest. That's why the Russell's rise was only about 0.25%. When leadership is narrow, the market can keep going, but it's also more vulnerable to a sharp reversion if a catalyst reverses momentum.
And option implied volatility drifted lower for the biggest names, right?
Yes, reduced implied volatility suggests lower hedging costs and more aggressive positioning into potential catalysts. That can amplify moves on both the upside and downside if sentiment changes quickly.
So from a Fed angle, this rally suggested the market thought policy might stay steady?
Analysts largely interpreted it that way. The read was, recent inflation and labor signals look consistent with a Fed that will remain data-dependent rather than aggressively tightening. That environment favors growth, especially rate-sensitive sectors. But the Fed will still be watching CPI, PCE, and jobs. Any surprise higher in inflation could temper momentum.
Looking ahead, what should traders and watchers focus on tomorrow?
There are a few clear items to watch. Fresh economic releases, CPI or PCE, jobless claims or retail data. They'll be read for Fed implications. Continued filings and earnings, especially in semiconductor supplies and software, can create pockets of volatility. Crypto follow-through matters for crypto-linked equities. And crucially, monitor whether small caps and cyclicals join the rally. Broader participation would make new highs more durable.
And keep an eye on breadth indicators and option skew, you said?
Exactly. Option skew and breadth help gauge whether the move is genuine momentum or a short-term squeeze. If skew compresses and breadth improves, the rally is healthier. If leadership tightens further and skew flips, the risk of a quick mean reversion rises.
Short reactions. I'm hearing cautious optimism, right?
Yeah, cautious optimism. Right, and it's data dependent.
Before we wrap, some concrete takeaways?
A few. 1. Markets closed up with tech clearly leading. S&P finished up about 0.8% and Nasdaq up about 1.4%. 2. Bitcoin's spike added to risk-on flows and lifted crypto-linked equities. 3. Breadth was positive but concentrated. Small cap participation was modest at about 0.25%, so watch for broadening. 4. Incoming macro prints and corporate filings will be the next catalyst to watch, and option and breadth metrics will tell you if this momentum can stick.
Perfect. Quick reaction. That sounds like room for optimism, but keep an eye on the data and internals.
Exactly. Momentum was bullish in the near term, but concentrated rallies need careful monitoring.
All right, that's our recap for today. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Remember, this discussion is for informational purposes only. It's market commentary, not personal investment advice. Analysts note risks and potential catalysts. Individual investors should do their own research or consult a licensed advisor.
See you next time on Alpha Recap. Stay curious and send your questions to stockalpha.ai.